All right. Good morning. Good morning, everybody. Hopefully, everybody had a nice weekend. Let's pick a screen, I guess. All right. So we have a lot of Fed speakers today. That's going to be the biggest thing on the agenda. I mentioned it last week. We really want to try to pick up whatever new narrative they're putting down. Now, of course, yes, they all want to be their own individual, unique person, but they also have to sing from the same hymn book and spread the word, whatever the word happens to be, right? They got to push the gospel. So you don't necessarily need to listen to their speech, but you definitely want to follow up, catch the highlights. As I was making an AI video yesterday, Bard does have access to current and live data as opposed to Chat GPT. So at the very least, you could ask Bard to summarize their speeches, right? And look for consistency between the different speeches. Let the machine do the work, yeah. Fed is, Bosick is definitely beating that drum saying higher for longer. And I'm pretty sure that's going to be the baseline song, right? That's all right. So as you can see, we have a tweezer bottom and an outside bar on China. Really nice follow through day after dropping down. It is a higher low, even though we no longer are getting those higher highs. And it really, I mean, it closed really well on the day. We'll just have to see if it can negotiate that 20,300 level. But up 2.76% after being down Friday and after having a down week, really. That was a really nice recovery candle out of China. It looked like Japan kicked it off relatively well too. Nice gap up, closed in the upper part of the day. It was a much smaller candle intraday for them. But overall, the distance traveled, is 0.75% from close. That's not bad. So bullish around the world. Europe as well, maintaining 0.5% at this point. Inside day breakout. They are pressing firmly against that high. Looks like it could close Marbozu. And they just got through this candle here. So if they can keep it, we're looking at an IX10 breakout. We'll see how it goes, but the next level up will be the deciding factor. The last two times they got up into that zone, they were firmly rejected. And if we were to take it back even a little bit more, so there's a lot of liquidity up here. We'll have to just kind of keep our eye on it, see if they got the gumption to get through there. So we talked about the dollar breaking out above that 102 and how it would be significant if it got above 102.5, and certainly if we had a breakout above 103. So we didn't get to 103, but we're negotiating with that 102.5 right now. I mean, we're there, we're kind of up and down and bouncing around it. So this is going to get resolved today, likely. we could close right back on it again, and maybe we don't get a perfect answer, but we're hopefully going to get it resolved today. Remember, above 103, we're going to be looking for the S&P to get down below 4,000 and maybe 3,900. If we can get back down below that, then we're looking at the S&P back into the chop zone. And I was watching a lot of analysts over the weekend, like stockcharts.coms. I like their TV. Which reminds me, if you haven't seen Stock Charts TV, there's an app for it. You can watch it on your phone. It's 24 hours nonstop market stuff, usually more breadth related stuff than anything else, but informative, insightful. It's free. I like free. Go check it out. But this zone here, this range that we've been screwing around in since April in the dollar, is the same range or zone that we've been screwing around in the S&P. So, it kind of stands to reason you want to see the S&P break out to the upside, to the downside. Just get the heck out of that zone and go. Got to get this out of the zone and go. So we did have a change, right? We finally got out of that zone. Now the answer is, can we keep it? And that's what we're negotiating with right now. So for today with the dollar, it might be a little more present to keep track of 102.32. That would be 50% of yesterday's bar. And it needs to hold above that. 102.52 is the 75%. I don't generally keep track of the 75%. 50% is the line we really want to keep track of. And we're really looking for that push above and or outside of 103. Simple enough, yeah. All right. Housing starts doesn't show up on, like FX Street as an impactful economic event, but I would pay attention to that one. As with anything else, nothing is an always thing, right? If we come over to FX Street, we can see that the Fed speakers hold more weight for anticipated impact than anything else today. But I would keep my eye on that one. We also have auctions today, the 3-month and the 6-month. So really front end on the curve. So 8:15, 8:30, 11:30. And then by the time this next one comes in, it's over 4 o'clock, so it won't matter to us. Manufacturing is always a big deal. So at 8:30 today, when we come into the charts, you can see that we don't have a narrow range. Work has already been happening this morning, and we have a kill zone move. Volumes light, implying that one of those two economic events that are coming up are likely to be impactful. Either the housing starts or the Empire State Manufacturing. We can identify that the market is a little concerned just by the volume here, but there's no market maker move. So it's not like CPI or PPI. They're not hedging against it, but they're certainly sitting out waiting for it. We don't have an MDP. We are above the weekly pivot point and the daily pivot point, and we finally started to consolidate. I would not say that that was a kill zone move, considering that it started yesterday, late last night, and then rallied all the way up into the kill zone, all the way up to 4 o'clock before it shut down. Isn't that awesome how it stopped right at 4 o'clock? Because why? Because watch the clock. You don't have to go spend $1,000 on indicators. All you got to do is buy a watch. Isn't that awesome? Since that move, though, we've consolidated really nice, holding above VWAP and building this topping pattern. Now we got to be a little bit concerned. This is a really ugly head and shoulders. It's not completed yet. It's only a partial head and shoulders, but it is there, and it is ugly. But you know, if the semblance of a pattern exists, it very likely will play out as that pattern would play out. So, obviously the better the pattern, the better it looks, the more people are going to trade it because more people see it. But yeah, either way, we want to be focusing on an inside day breakout to the upside this morning because we're closer to the top than the bottom. That makes sense, right? But a rejection of wouldn't surprise me, right? So coming up into that 41.64 and maybe overshooting the line. Liquidity resides on the other side of the pivot. Remember, I'm going to keep saying that until you own the t-shirt. So we could overshoot before rejecting. Or they could front run it and we don't get there at all. And we end up coming up with just a little bit short. All right, so I turned off a lot of that stuff just to kind of clear things a little bit. You kind of see that megaphone pattern a little clearer. Don't get hung up on, should I use the wicks? Should I only use the bodies? It's just a visual representation, right? It's not like we're going to try to trade those lines. Now, the way the megaphone really starts to even formulate is because you have a range, and then little by little, it gets a little wider, and then a little wider and a little wider, and it just keeps doing that, getting bigger and bigger and bigger until finally it breaks and it goes somewhere. A break to the upside puts us back up into that 41.98. Overshoot with the cog line 42.11, which right now also happens to line up with a voodoo line. And a break to the downside puts us at around 40.70, 40.60 area. So this area that we've been in now for all of April, and now all 2 weeks in May, we're building up a lot here. This is compression just winding up tighter and tighter and tighter and tighter. Call it a draw, just drawing everybody in. And in a range bound market, both sides can trade. Bears can trade and make money. Bulls can trade and make money. Everybody's making money and everybody's happy. But there's a lot of liquidity on either side of this box. So I'm not being bullish. I'm not being bearish. I don't really care. We gotta get out of the box, right? I don't care which way we go. If we just push through the box, we could continue with the same kind of concept of this megaphone from a higher time frame, right? The wider megaphone here instead of the smaller one here. So just wicking up there isn't going to get it done, because we could just come right back in, or wicking down below here and getting below this lower edge, we could come right back in. So we need a definitive break beyond the zone, right? Be mindful of that when we do get near the edges this week. I'm not sure that we're going to reach the edge this week, but I got a pretty good idea that we will. So when we get to the lows this week, this is where you would consider buying into weakness. And when we get to the highs up here this week, selling into strength. That's the baseline bet that we're going to continue to do what we have been doing until we get something different, right? We don't want to presume that this time is going to be different. If the breakout continues and we get above 42.11, maybe 42.28, then you could consider. And if you're thinking buying it at that point wouldn't really make a lot of sense, well, you'd be buying into strength. And this thing's going to take off like a mad demon if we get above, say, 42.50. We're going to 44. But the same thing could be said on the bottom. If we get down around that 40.60 area and just punch through, I don't think it would stick. I think we'd just rally back in it again. But if we can get below that 40.30 cog line, we're going to 38, right? Maybe 38.5, 39. I'll hedge myself a little bit and say we're going to 39. It's still a long ways down from 40.30. So, it's kind of keep that in mind. 10-day, 30-minute volume profile. It's a classic shape, but not one of the letters that we would normally associate with the volume profile, right? The D, the P. But this is like the crown shape. I don't have a better phrase for it, but volume buildup at the high, volume buildup at the low. Obviously nowhere close to the volume buildup in the middle, which is where the point of control is. But even though we didn't spend very much time there at all, which we can see from the TPO profile here in blue on the right, we didn't spend a lot of time there, but we sure did get a lot of volume there. Same thing across the highs here. Over the next 2 days, we're going to drop that volume off unless we happen to rally back up there. So we didn't spend a lot of time there, but we sure got a lot of volume up there. With the 10-day, 30-minute volume profile, when we're at the low, we expect to go to the highs. When we're at the highs, we expect to go to the lows. We're not at the lows, and we're not at the highs. We're near the point of control, which at some point starts to act like gravity, and we're going to be spinning around it back and forth until finally, like a top that you spin on the table, it's going to lose its axis and take off one way or the other. Keep in mind, while we're on this chart that has a very clean example of this low, we didn't hit anything here, and we didn't hit anything here. Something else hit something and turned this around. I don't know which market. It, could be the dollar, could be the bonds, I don't know. Something somewhere else hit something and turned us around here. But it does highlight an area of concern. You're not going to want to necessarily put a pivot point there, like a line and shoot it across. I would treat it as a zone. And as price comes down into this zone, be looking at the other markets, right? The dollar, the bonds, yields, US dollar, Japan, look around and see what's about to hit resistance or what's about to hit support, and see if that other market is going to time the bounce in the same spot that this would bounce. All right, Thursday's VPOC was taken out on Friday. I know it's hard to see through these volume profiles, but on Friday, when price drove to the downside, we hit that VPOC and bounced off of it really nice. I call it a first touch play before finally dropping down through it, but it was a nice, very nice play. That's why we keep those on there, right? Just they might provide a little bit of opportunity. We don't have a VPOC to carry forward from Friday because we hit it in the overnight hours. I do things the same way every time. So for me, the VPOC, now that we've hit it today, I would already have it taken off. There is a technical analysis rule of thumb that says you would put it on there and leave it on there all day, not as a VPOC, because it's no longer V, right? It's no longer virgin, it's been hit, but it's still a point of control that you would carry forward. Now, I don't personally do it, but that doesn't mean that I'm right and anybody else is wrong. When it comes to these volume profiles, carrying forward yesterday's levels is, I mean, that it's a concept that traders use. I throw it out there because someone was asking me the other day why I only carry forward the VPOC and how come I don't just carry it forward every day, because they had read that you're supposed to carry it forward every day. And sure, I mean, you can do it that way. I don't, but again, that doesn't mean that I'm right. I've got enough pivots. I don't need to carry forward the volume profile point of control from yesterday just because. That's not a good enough reason for me. All right, so on Friday, this box was not yet formed, right? Or it was formed, but it had not yet closed. So we couldn't trust it at the size that it was at the time of the briefing because we had to wait for the market to close. So we can see that the volatility is very slightly more this week than it was last week. And since I wasn't precise when I drew that box, it really could be the exact same size as last week. No change there at all. The range on the week to get a dollar value from where we are right this moment is $58. Now think about what I just said there, $58 for the week. When this says our average daily range right now is $48. This thing says we can move $48 in a day because we have been moving at least $48 a day for the last 21 days. It's a 21-day ADR. That's how narrow things are right now, that the implied volatility expected move is $58 for the entire week. The machines can't think ahead in this situation here and consider the fact that we've been compressing and compressing and compressing, and that we're very likely going to explode when we do leave the range. The only thing the machine can do is recognize, well, last week was ranged, the week before that was ranged, we're very likely going to range again this week, volatility is low. It's only low until it isn't. I know this is a really messy chart. I get it. There's a lot of stuff going on here. But keep it simple, right? All these wicks up here just shows that there's a lot of liquidity up there. There's a lot of sellers sitting there, and that they were very happy to sell at that price. And that goes back here too, right? We were able to get up into that liquidity and came right back down again. It wasn't enough to make it through. And now, instead of it being, at that 4,200, 4,180 area, it's even lower at 4,170, 4,150 area. So here we are this morning, rallying right back up into that zone. Don't be surprised at all if we don't make it through that zone. And in fact, with the yellow line that I have drawn there, which one? There's a lot of them. That one right there. We can see how the defense came sooner each and every day. It came a little bit sooner and a little bit sooner and a little bit sooner, right? We didn't get as high on the second day as we did on the first day. We didn't get as high on the third day as we did on the second day. And here we are today. $5.10 is the boss. The open, high, low, and close of 5.10 can be your control candle. It is absolutely worth marking out, paying particular attention to. It's going to provide pivot points of concern, and it wouldn't hurt to go in and see if your Globex levels match or offer opportunities that are different from your RTH levels. So instead of having 4 pivots, you'd actually have 6 pivots from that thing. Or you have the potential to get 6 pivots from that thing. That was the CPI Wednesday, right? Monday, Tuesday, Wednesday. Looks like it. Hey, imagine that. All right, so Europe's going to be front and center most of the week. It's going to be what you really want to focus on. And we got non-stop Fed speakers and European speakers, right? European Central Bank, Bank of England, and then US Fed speakers all week. It only takes one of them to screw up, to say something inappropriate or at the wrong time, in the wrong way. But with those also, it's worth keeping in mind that they may not all be live speeches, right? And where they speak often becomes important. So if it's, a Girl Scout lunch, probably not going to be that impactful. If it's pre-recorded and they don't take messages or take questions, probably not going to be that impactful. All right, bonds are down, dollar down. Bitcoin up more than 3.25%. KWEB, the China constituents, right behind it. Even the GBTC, which is Bitcoin ETF, or not an ETF, excuse me, Bitcoin. This usually doesn't show liquidity in the morning, right? Things will be moving around and this thing won't get any real action. So seeing it moving around this morning, pretty cool. Kind of implies there's a lot going on this morning. Bitcoin is a liquidity tail, right? So we really want to keep our eye on that when it's moving around. And also the NASDAQ is more than 70% positively correlated with it right now. So it's worth keeping your eye on. The dollar and the bonds open after 8. So one opens at 8, one opens at 8:20-ish, something like that. And we can see they're getting ready here. They're already starting to try to front run the clock in the ZB. We're not getting a correlated market or even an inverse correlated market yet between the move in bonds and the move in quote stocks. If we were, then we'd have the ES breaking out to the upside, or if it was correlated, breaking down with it. ES is still riding above VWAP. ES and NASDAQ both are resting on VWAP. A little bit of perspective, right? Two entirely different things. So with the dollar, one thing that we want to see this do is calm down. No big sweeping moves, no fast run to the upside like Friday, right? The more this pushed Friday, the more we fell. And then when it topped out and went into the close, and that pressure, that negative pressure from the dollar was no longer there to beat this market down, then we did what markets do, went up. Or like a balloon in water is the analogy that I use. If you put a balloon in the water, it's going to float. It's what it does. Now you can hold it down. Your pressure can keep it under the water, but as soon as you let up, that balloon goes up. So the dollar was the pressure against the market Friday. Once the dollar topped out and quit going up, quit putting pressure on the market, and then even more once the dollar closed at 2:45, 3 o'clock, the market no longer had that negative pressure and it could rally. Makes sense, right? So the 10 years coming into 3.92. That's really close to a 3.492. Excuse me. It's really close to 3.5. 3.5 is just a nice simple round number, and I would say it has merit. But we can see the topping pattern came at with an overshoot, 3.51, 3.52. So expect a lot of trouble here at that 3.5 today. And see if we get through it, or if we just get up in there and stall out. That stalling out here might really help the market. You can see how when it stalled out on Friday and the dollar stalled out on Friday, we got a little bit of a boost in the market. This morning, we've got this thing continuing to push up. And we got the S&P pushing up with it, or at least now starting to stall out. There goes bonds. Get her done. These are going to be the tools you'll want to use today. Absolutely. They are the ones that are front and center more than anything else. Notice I don't have the VIX on here. It's not that we don't want to look at the VIX, but right now the relationship between these three are going to be more beneficial to your intraday trading process than the VIX will. If you have the screen space, or even just the chart space to add SVXY and the VIX both, then that could help. Otherwise, just bring in the ticks, the weighted AD, C-tick, advanced decline, KRE, and NY Fang, right? Just another 10 or 12 markets and you're good to go. That's why I use 2 computers and 6 screens. As bullish as it feels, or as bullish as it looks, as bullish as it sounded so far, we've only got 11% of the NASDAQ up 0.5%. So that's not bullish at all. That's a pretty pathetic excuse for a bullish market this morning, especially when you consider the names that are up are a lot of China ADRs. So they're all from this same chunk of the market, right? JD, PDD, those are both China ADRs. And then some chip names like MU. So I'm not feeling it. And Meta's getting a little bit of love. That thing's been a turd for like a week. So I guess everything's going to get a little bit of love at some point. Let's go take a look at Meta. It might be an opportunity finally. Finally. All right, so it had that island, right, from the gap up, and then it just stalled out with a whole lot of nothing, slowly been fading back down again, but holding the level, right? So think about it like a car on the interstate changing lanes. It was in this lane, now it's in that lane. So it's either going to come back again, which would be an island reversal, or we're going to finally begin this continuation. Closed at 233.8 on Friday, and we're at 237 this morning, which puts us above the close, or excuse me, above the open from Friday. 237.12. Looking at the ask up here, 237.10, 237.12. So we're right there. If this continues to push in the pre-market, we can get above that open. This is a red to green flip, right? You can see how on 510 we closed there and we opened there, and then we rallied back up, had an inside day breakout, couldn't keep it, came back down again. This time, however, we closed there. We're looking to open above the last open, when that will provide support, hopefully. Maybe fade down, bounce off of that, and get a rally to the upside, which then sets us up for the strat and that machine gun pivot reversal. Each one of these would be stop pools. So if we can rally up, trigger through that pool of liquidity, trigger all those stops, which adds to the buying, pushes up to the next level, adds to the buying, to the next level, adds to the buying, to the next level. This thing could go all the way to 245 today. I know how crazy that sounds, and a long ways away from where it closed, right? But you're talking about 245. That's only it's less than 5% move. Facebook can move 5% in a day, no problem. Its average move is 2%. So we're just talking about twice the average move. That's nothing. Now, I'm not saying, just to pull back the reins here a little bit, that it's going to go there. Just that it has the capacity to go there today. It's one of the reasons that I like IX10 and TRB setups. The candle that runs very often is 2 and even 3 times the size of the previous candles. So it becomes a monster. We do have a market maker move on Facebook, by the way. So now we've got 2.18 for the average ADR and another 1.2 for the market maker move. Put those two together, you're looking at 3.3, right? It's not bad. That's not that 5% we were talking about, but it gets us closer to it. Yeah. I think Facebook might be one to watch today. And the good thing is if the market does sour and this begins to fall, since it rallied up so much in the pre-market, it has a lot of room to fall. So it'll be a great short if everything starts to just kind of unravel today. Something to certainly keep in mind, right? And since there's a lot of resistance around that 238 and a half, we got to get through that to be able to get really up into that 240 and then 245. All right, so financials are up this morning as well. When we think about the groups, we've got the chip names looking pretty good this morning. Ah, darn it. The China ADRs, the Bitcoin proxies, we've got financials. Oh yeah, look at the crypto proxies doing really good. AMD is not doing so good. Let's go take a look at that real quick. What you got? Really flat. So it's not necessarily negative. It's just not positive. I'm positive that it's not positive. Got a head and shoulders pattern off of that $100 level. That puts us back with a measured move at around $90. Just keep in mind, that the last head and shoulders that it offered didn't materialize cleanly either. It finally got to its target, but I would argue that it invalidated itself first, and then it finally got to its target, right? So it became invalid once we had the head and shoulders and then the neckline break, and it came back up, stopped everybody out, and then went in the right direction anyways. So we have the cup and the handle. You can consider that. Same as we had down here. But right now it's kind of flat, doesn't have a lot of anything. If you're looking for like a red to green, we don't have it. The fact that it's not rallying is kind of a good sign. And the fact that it's not just absolutely dumping. So if we open gap down a little bit, that's going to make me more bullish on this than if we had, opened and rallied even more this morning. So I like it. If we come out to the weekly, we can see this repeating pattern here. Like a scooping pattern. But we still got to worry about $100 and then that 105 area, right? 103 to 105, just this big box sitting up there. That is a really big box from last week, and we are in the middle of it. So one thing that you want to focus on is 50%, 94.56. We got to get above that and stay above it. Right now, this morning we're at 95.30. So, we're already above that level. It's not like we have to reclaim it. We're there, but it has to keep it. We come back down below that level, then we're going to be looking to retest the open of that week around $90, a nice round number again. So crypto's looking good. That should include Riot, Mara, Coin, the proxies, right? PayPal, Square, NVIDIA. Although, NVIDIA is not looking all that glamorous either this morning. We had a 10 MA cross and got stuck on the 4. We're right in the middle of all this trash. So NVIDIA is certainly not looking like a good trade, not to the upside. We do have this wedge, right? This very big rising wedge, which should eventually break to the downside, but we're on a daily chart and you don't want to try to short this just because of that wedge. We need a lot more time for that, right? So MU is doing the best out of the chip names. Texas Instruments is the worst ADI behind that. So we got a little bit of a mixed bag. Texas Instruments and ADI, they might be in this chip list, but it's not like they really land in the same group as NVIDIA and AMD. I want to see more liquidity in here today. It's something to keep your eye on as we get past the open, say by 10, 10:30. As a whole, this really should pick up more. If we don't have semis, then what do we got? That's really kind of what. There's only like 4 names holding up the entire market right now. We lose those. Speaking of those tech names, Microsoft is flat this morning, and Apple is only up 0.25%. And Google finally came out of that range that it's been in forever with a topside breakout. This is a news related play on Google that an investors event last week. And as you can see, it was absorbed positively by the market, but they have to be able to keep it. And that's really what it comes down to. Plus, with a rising wedge, the follow through is to the downside. But what we often see is we'll get this like blow off top, and then we come back inside the wedge and we break through and go to the bottom. So the fact that we broke out through the top of it, okay, I mean, it's fine. It'll be more fine when we get back inside of that wedge. All right, First Solar is still getting some follow through. You can see that runaway train from last week's candle closed right up against the high of the week. So this is a classic pendant or classic bull flag. Needs to follow through. I have a measured move up there. I don't normally keep a level like that. And it's old. This is an old drawing. I don't even think we really want to keep it anymore. Let's just go ahead and expand it up to all of this. Let's take that off. We already got one up there. All right, 236.7 is the next area of concern. We're in uncharted territory at this point. So, I didn't take it out onto a monthly, but I'm pretty sure we're not going to find anything. Oh, hey, sometimes it does help to go out far enough. So if you go back all the way to 2012 and then 2011, 2010, the 07, 08 housing crisis and all of that, there are some levels way out there. Now you got to kind of believe that there's no liquidity issue, right? It's not like trapped traders or unfinished business or something like that, right? Not at this point. So 317 is the all-time highs. It's a long ways away. We're only at 230. So like 115 points. 267 is going to be the area of concern right now, and that's if it can keep it. The way things have been going in the markets right now, when you have something that's just running like a mad demon, you can look at this all you want and say, oh, I'm going to short it because it went too far. But I think that's the wrong way to go. It's the wrong approach for the kind of market that we have right now. What is strong stays strong and still until something changes. So whatever kicked this thing off last year in July is still going. And sure, it did have some weakness. We can see this really long wick down here. But that weakness is done. It's pushing right against the top of that candle and still going. So something to consider swing wise, FSLR. And I'm not suggesting that you shouldn't wait for a pullback for an opportunity if you're going to swing this through the rest of 2023. But if you sit around waiting for a pullback, you might not get it, and it could just keep on running. One way to deal with that situation is to scale into your position. Take a little bit, add a little more, add a little more, add a little more. All right, significant reversal in W day. Finally, this is a absolute change in market structure. You can see very clearly what it was doing and what it's doing now. But this is an hourly chart that we're looking at, so it's not as good, right? Come out to the daily. That's still a pretty solid bullish engulfing. That was a really nice rally back up from that weekly gap. So the one thing to keep in mind is that this was a gap close move. If we closed there and we opened here, the market ran back up and closed the gap. But that might be all that it wanted to do. So kind of approach this with a little bit of caution. Otherwise, we have a really steep TRB setup here. And the reason that TRB setups are so awesome is because the follow through candle is very often 2 or 3 times the size of all the other, or the average candle around it, right? That's what makes it's such a great momentum play. So, we got this really great outside bar, bullish engulfing. It needs to follow through. The bid ask is so wide this morning that we can't even really use that We have to come in and just actually see the chart. No liquidity here this morning. One dashed dot doesn't mean anything, right? So we got to get more information out of it. But it is showing up in the list, right? So for what's bullish this morning, WDA's on that list. All right, a very weak bank with an issue around that $25 mark. If this was a double bottom back here, and we punch through to trap all the bears, the trap is set. It would need to rally now, right? We're past dividend, we're past earnings, there's nothing left in the way. Got a nice TRB setup. Just be careful. This is a gappy bugger. $28 closes the gap plus some, right? I kind of overshot that a little bit. But once the gap is closed, that would also be a full-on trigger for the TRB. So it'd be a confirmed runner at that point. 27.9 be that gap close. So the target would be 29. If we can get past that, then, we could focus on the 30, but I really think that's too much for this one. It's got a market maker move this morning at 2.5. Foot Locker is showing up on there, but it's not looking good. Yeah, there's just too much on Foot Locker. That might be a nice short. So measure this really big candle here off from the 10th, 39.33, which we got above here in the pre-market. Needs to keep it. Otherwise, if it can't keep it, that's a nice bounce off of support, a rally into resistance before continuing and moving to the downside. It's a nice reset, right? I like it. That might be priming up really nice for a short. If it gets above $40, then we're wrong, and it's not a rally into resistance before rolling over. It's just very likely going to come back up to the top of the range again. So I wouldn't try to mess with it at that point. All right, everybody, I've kept you long enough. I appreciate your time and attention. As you can see, the news this morning, the econ wasn't absorbed well. We broke that range we've been holding. Be careful, be safe, have a good day. Watch the clock. Keep your eye, like I mentioned earlier, on these three: the 10-year, the dollar, and the bonds. They're going to help you way more than anything else today. I'll see you all tomorrow.